Live streaming is on.
All right, good afternoon, everybody. Event Trader here, and we are just watching this afternoon price action play out. And while we do that, we're going to be inviting in options trader Brandon Mars for a little talk about the markets and about some of his recent trades and some other ideas that he's got percolating over there. So, Brandon, how are you doing today?
Excellent. How are you, Gavin?
I can't complain. I know we were just talking about this price action here, and there's a few things that you were noticing on your end on the Thinkorswim platform that you thought was interesting. So you want to just kind of relay that message to the subs?
Yeah. So what I saw was, we were talking about that 10-year yield, and I saw it looks like a seller came in, or yeah, I'm sorry, I've been saying this incorrectly. We saw that little spike up after the auction, and then looked like somebody came in and got a pretty big red candle there on the 10-year yield. So it almost looks like it's slowly headed back towards the low of the day potentially as a little bit more selling kicks in. So yeah, that was kind of what I noticed that might have been playing around with the indexes that we were just talking about a moment ago.
All right. Well, we'll obviously be watching this. I am out of my short as I posted to the page. Was expecting it to break down right around 1250 there. It should have, not 1250, about 130, and it just held up and reversed higher. I didn't like that price action, so I'm just going to the sidelines. But Brandon, let's talk about the last couple of days here in the broader indices. Obviously, a couple of selling days going on there. Starting to see more red on the screen in general. So I'm kind of curious as to your mindset. I know you like to get into either a call or a put option mindset, and I'm wondering where you stand right now given the recent price action.
Well, no matter what I say right now, I guess it will probably change by the end of this call based upon these swings that we've been seeing lately. So, um, yeah, I mean, definitely some good trades, but it's been maybe a little tricky at times. You've seen some pretty good velocity. I mean, great for an options trade if you're in it in the right direction. Just because, obviously when you get those quick moves, those are usually pretty beneficial for options. Obviously we're climbing here. The market's just shrugged off that weak auction, so always good to kind of see the markets holding up. I guess the conspiracy theorists in me, with the inflation reports coming out tomorrow and these swings, I would imagine that we wouldn't see smooth sailing into the end of the close. That would just be a hunch based upon, call it the last 2 weeks or so. So,
Yeah.
right now, the stuff that I have sitting in front of me and even on the indexes here as they hold up, seeing some buying coming in. So you're kind of leaning towards the bullish side as I see this, but I don't know. I guess from the last couple of weeks, I got in the back of my mind to be careful of some sort of rug pull into the close.
All right. Yeah. I mean, and that is a good point that Brandon makes with that CPI number on deck. People are expecting an acceleration at 3.4% from 3.2%. So should keep people on edge. That was another thing that I was looking at with possibly leaning in on the markets, but they're holding us up. They've pushed it to 52.41, so we'll keep an eye out on this price action moving forward. But so going into earnings season, then Brandon, are you pretty much open-minded at the moment? Would you say is that a fair assessment?
Yeah, pretty much. I'm kind of just probably similar to a lot of other traders playing the ping pong in particular on the Nasdaq between the 20 and the 50 day. So, luckily for me, not really doing anything around individual earnings reports. I can, I guess, kind of put that a little out of my mind and just kind of watch the price action once the reports come out. But I guess as long as we keep holding up here, like we have over the last couple of weeks, and shrugging off some rising rates and some geopolitical headlines and all that good stuff. I mean, I guess in theory the move would most likely be to the upside, right? The longer you kind of hang around an area, especially through potential headwinds, the more likely you are to continue the trend. So, still just kind of leaning towards the call side, but, obviously didn't make a ton of sense to be in calls through some of these drops that we've seen over the last couple of weeks.
Yeah, no doubt. And I'd have to agree with you. I think it's kind of setting up for an early earnings season chop, and then as long as everything's okay, I could definitely see that this being viewed as a consolidation in the bullish trend, and then another push higher, and then you get the sell in May. People start you get the scream from the tops of from the mountaintops that we're about to fall over into the summer, right?
Yeah, exactly. And you're the fundamental expert. I mean, all my fundamentals come directly from the stuff that you post these days, but I haven't really seen or read anything that would really make me think that we were going to get some huge earnings surprises and huge slowdowns. I mean, consumers seem to keep spending, and companies are pumping out their AI stuff, whether it's actually making money or not, or revenue, who knows, but the street
Yeah.
likes it. So that's all that matters.
Yeah, no, exactly. But of course, Brandon, that's why they call them surprises, right? When you're not looking for them, they tend to pop up. But yeah, no, I'd agree with you. Definitely some channel checks and some of the recent consumer numbers we've seen. I wouldn't even say the consumer numbers are weak as much as the outlook's been very cautious, and I suppose that would probably be the one thing if people just decide to kind of lean in towards that on the cautious side. That would be something that we need to watch. But so let's take a look then, Brandon, at some of your recent trades here. Reddit is one that you bought some calls in, I believe, this morning, right? So just kind of watching that chop around in its own right. So what are you looking at in Reddit?
Yeah, so Reddit got into that yesterday. So it's a holdover overnight position. And yeah, like you said, annoyingly chopping around for me. So, kind of what caught my attention was, obviously had the big move higher on the IPO, and then we had a little bit of a pullback, and we are now on 5 straight inside days from, what is it, April 2nd. So just was kind of I had it on my radar entering into the week, and I was watching it intraday, and right at the open, there was some really nice buying volume that came in. It kind of looked like it was going to run, and then they just pulled the ripcord. I mean, obviously I haven't traded this much because it's only been around for a short amount of time, but
Right.
no surprises. A little whippy in the morning. I wasn't caught off guard or shocked or anything, but definitely kept you on your toes. And after that buying came in, it had me intrigued that there was some buyers lurking out there, and saw a little bit of a pullback, and had a couple candles come back in and got that kind of long wick that I look for, and jumped on it. And, it did end up making about a 1.5 move higher after that. Unfortunately, in the options world, on a Monday, when you have a high volatility stock with high premiums, there was a little money to be made there. But, unfortunately, you kind of need a little bit of a bigger move. And then it just kind of came in the rest of the day with the volatility. So, again, it's this one. I got to be honest with you, Gavin. This one's kind of annoying me.
Yeah.
Just,
Out of curiosity, how are you finding the options activity in Reddit? Has it been pretty smooth? Has it been a lot of volume there?
no, there hasn't been. Yeah, I know
Really?
you asked. I think you asked me about it last week, and it was last week or the week before. Or it had to be, I think, last week, because I think that was the first time it had options. I think around the time I had said there was like 25, 30,000 calls and puts traded on each side. I mean, today we've only got about 15,000 calls and 3,600 puts traded. So very, very light. Slightly elevated on the call side. Again, a very small subset of numbers to work on for that. And, put call ratios down around 0.2. So obviously there's a little bit of bullishness there in the options world. But this one just, I don't know. I guess it's probably because it's kind of lumped in as, one, it's a new IPO and you've got the retail world mixed in there pretty well with the institutional world. So that always leaves us open for more games. But just the way this one trades, it's a little funky, I think, so far. It keeps looking like it's accumulating and getting ready to go. And then it just kind of keeps coming back. And it's, I don't know, making me lose more hairs that I don't need to lose.
Yeah. Yeah, no, I hear you. All right, so Reddit will continue to keep an eye out on that. Any thoughts? Are you thinking of getting rid of it by the end of the day? I mean, what would force you into action over in the final 2 hours of trade here?
If over the last couple of hours it really dumped, I mean, I'd have to see where the options stand at this point. I do like it though, because I mean, it is on these 5 inside days, and I would lean a little bit more to the upside on this. I mean, the IPOs, you obviously don't have a ton of technical stuff to work with on the charts, and that's kind of, one of the harder parts about them. But, just from where like the MACD histogram is, you kind of looks like you're catching it at the bottom. I think this area that it's building could potentially be a base. And one thing that I do find intriguing is, it's at the 46 level, which is right around that 47 from the open. And, if it kind of kicks around those levels for a little while, that can, be one of the potential traps where, they're getting more shorts in there because it's below 47 and they're getting people to sell. And, that's when you kind of get the shorts to cover and the FOMO buyers that got out. So, I would lean to the upside again if, CPI comes out and smokes everything tomorrow. That 45 level is probably fairly vulnerable.
All right, another name going after some of the high flyers here. AI C3.ai, ticker symbol, of course, AI. You brought some calls on this, correct?
I did, yes.
Making a nice bounce back here in the afternoon for you.
Yeah, and you're right. The high flyers, I was almost a little hesitant to jump on 2 of those at once, but I saw some stuff in AI in the charts that was intriguing me. So, this is obviously not the prettiest chart. I mean, that made that nice move up, and I didn't think that the move up after earnings was justified to go quite as high as it did. The numbers just didn't seem that overwhelming. So, pretty big pullback here, but you kind of get that, weird kind of steepish trend line building to it, and thought it was getting to the, maybe the selling was getting a bit overdone. It's not an oversold territory, but thought we were getting there. So I had it on the radar yesterday, and again, intraday activity that I saw just built one of those steep trend lines, and saw a couple of doji candles, hammer candles coming in on the higher volume, things that I look for, and again, just unfortunately got pulled down with the market. This actually is now intriguing me even more, because at 1 o'clock there was a pretty big volume spike, about 4 or 5 times the volume from the candles before. And there was also nothing too earth-shattering, but there was also some elevated call buying that came into it. So like you said, getting a little bit of a bounce here, and we're getting back up to that key 25 level, and it's kind of stair-stepping its way up. So I am intrigued on this because of that volume spike. It was a pretty clean candle, and the buying kind of came in just kind of out of nowhere. So still sticking with this one and hoping that we get a continued bounce.
All right. Any levels in particular you're watching out for this?
Yeah, I mean, this 25 level is pretty key for it. Again, as I flip over to the daily chart to answer that question, we do have a little bit of a hammer candle that's forming right now. And, volume is not, again, earth-shattering, but it's looking like it's going to surpass yesterday and maybe come in at a halfway decent number if things don't dry up here in the afternoon. So, keeping an eye on the 25 level, and then on the downside, the obviously dipped below this today, but the 24.75 level, you'd probably want to see it close above that at least for the day.
That'll kind of be your decision maker on if you're going to stick around it, you figure.
Yeah, I got to see how this. I always get intrigued when I see those big volume spikes, especially when they correspond with call activity. So there was a couple of chunks that came in. And again, these aren't huge numbers, but for AI, they're decent. But there were a couple of chunks of calls that came in that were like 200 contracts each, kind of around the same time. Interpret that however you will. But whenever I see those things, I always get intrigued. And then, on top of that, if it does form a hammer candle and the volume picks up, I mean, those are the types of things that I look for on a potential bottom.
Okay. Let's see. They are the only two names that you're currently involved with, correct?
Yeah, that's correct. Unfortunately, they, as just discussed, are not going my way at the moment. So didn't really want to go and get crazy and open a bunch of new contracts, especially with some of the volatility. So
Sure.
honestly, it's
Yeah.
been kind of killing me because I've been seeing some nice setups today. So, getting getting a little
Kind
trigger
of like what
happy.
we're talking about, where you could see 10 setups and you just go with the wrong one. But this one's climbing up here. It's getting up towards that 25 level. So we'll keep an eye out on it during the course of the session here. You did have a few on your radar. Obviously, Google making a lot of noise today. They kicked off their Google Cloud event this week and announced that new chip that they are working on. So this one had been attempting to break out above that 155 level. It's reversed back a little bit, but still holding up at the moment. So what is it in Google that you're watching for here?
Yeah, I mean, as we talked about this now a couple of times, it's got that longer term cup and handle pattern to it. And I was watching the 155.5 level because that was the close of the ignition bar from the candle on April 1st. So this is actually a pretty good setup, I think. Putting their event and announcements aside, I just like this from a chart perspective. You got that big ignition candle, and then you had two inside days, almost actually five, but on the 4th and the 5th, you just kind of dipped below that mother bar ignition candle that I'm talking about. And, those are the types of cases where, again, they potentially draw on shorts thinking that we're going to reverse. People also sell. So then you've got the FOMO crowd out there. So I was watching that 155.5 level as a breakout because, I mean, it was strong yesterday. It held up really well versus the rest of the market. And yeah, unfortunately, there was a news announcement this morning, so it would have been great if you were in it overnight. But once it had gapped up, I got a little nervous, and I've been watching it all day. I think this still has upside with its technical patterns in play, but I don't love that big, long upper wick on the daily chart that's forming. So, we've still got a lot of trading to go. That could easily change, but anytime you see those, it always gives me at least just a little bit of pause.
Yeah. That'd be what, a gravestone doji then, or?
Yeah, I mean, when I was looking at it earlier, it was actually a shooting star at the time. So it's been kind of bouncing around between those two.
Okay. So we'll keep an eye out on that close. So this, you would prefer it to close up, say, around that 158 area? Would that be fair to say?
I mean, that would show it give it some pretty solid strength, right? I mean, that would be, 3 straight days of candles with almost no wick at the top would almost give you like the 3 white soldiers pattern. So you 158, I would say, especially headed into the CPI print, would really give it some strength. But I personally don't know if it will get back there, again, because there's probably some sellers lurking out there that are kind of looking at the same setup that I am. And, kind of like we talked about, who knows how many people are going to want to jump into new positions prior to the inflation reports.
All right. Another name on your radar, Advanced Micro Devices, AMD. Uh, Patterns look a little ominous on the daily, I would say, but um, did you, when we look at that Thursday bar, which obviously was the sell-off with everything else there, you could see it broke down below the 50, holding above the lower end of its Bollinger Band. So what is it that you're seeing in this pattern that you like?
So this was for a potential put opportunity. And what catches my attention is from February 1st, that has a gap to fill. And it is just sitting there over the last couple of days. I mean, it is just kind of hanging out a couple points above that gap. So your gap would be, call it the 165-ish area. So you've got 3 days now where it's just kind of hanging around there. And like you said, I mean, that candle on the 4th was ugly. I mean, very, very ugly. And since then, that bounce has been very weak. I mean, it really hasn't even made it back up to the halfway point of that candle. So, again, just knowing that gap is there, and when you get that close, they tend to fill. That's just kind of how gaps work. So, kind of keeping an eye on that, and just kind of the weak bounce. And then, in conjunction with that,
That
probably
165 lines up for the 20 weekly moving average too, right?
Yes, you are correct there. Good catch on that one. So yeah, I mean, again, the charts it doesn't look great, unfortunately, but I would imagine with the run that we've had, and that sell off, I think kind of came out of nowhere. I mean, my dad owns this stock, so he asks me about it all the time. So I mean, they hammered on that thing all day, and it just seemed like the algos were just dumping shares as quickly as they could. I happened to be watching it real time. But you would think that with everything going on in the semi world and how well it's done, that you would think there would be some nice support there between the gap and the 20-day on the weekly, like you said.
All right. And then the next name up, one of the more important characters today, and well, I guess for the last 3-4 years, NVIDIA, down 2.69%, certainly taking its toll on the broader market too, and just market sentiment, right? Because when you start seeing the general get knocked down a little bit, that could shake up some sentiment for sure. So what is it that you're seeing in NVIDIA, and what is it that you're looking for?
Yeah, so NVIDIA was kind of in conjunction with AMD. Again, when you see the general of the market and you see kind of two of the leaders in the space with some similar setups, again, especially trading options, I always like to find sectors that are all looking great, or on the flip side, all looking terrible. I don't want to necessarily say NVIDIA and AMD look terrible, but had that similar setup, a little cleaner than AMD with just the moving averages and stuff. But again, had that real big bar down on the 4th, and then 2 days, the inside days, the bounce is a little bit stronger than AMD. And then also what caught my attention, and I put this in my notes, AMD NVIDIA up until these last few days, it had only closed below the 20-day once all year. And it was by like 20 cents. So, I mean, it barely closed below it. And now all of a sudden it's closed below it, 4 straight days, unless it has a pretty serious recovery this afternoon. We're looking at, sorry, I'm looking at this at an angle while talking so everybody can hear. Sorry. So we're looking at 6 straight days potentially of closing below the 20. So, just seeing AMD and NVIDIA both kind of having that, similar pressure to the charts. Just thought it was worth watching. And yeah, I mean, NVIDIA took a real nice dive this morning. And, I even put this in my notes. I probably wrongfully so would have gone with AMD just because I'm so fearful of betting against NVIDIA. But, that would have been the play. If you had just taken like the 850, even 800 puts right out of the gate this morning, you would have done really well.
Yeah, yeah. So, what would be some of the things that you're looking for in NVIDIA moving forward? And give me some red flags that would have you nervous in terms of the price action for NVIDIA.
So for NVIDIA, I mean, we do have a wick forming on the bottom of the candle today. So again, a lot of time to go. If it can reclaim the, call it the 860 level, so the close from that big down day is 859-ish. So if it can reclaim that level, that would grow that wick on the bottom. Volume on it today is pretty strong. That might actually intrigue me as a bounce candidate tomorrow. Again, if you look at it all year, it hasn't really stayed down for too long. I think the narrative's changed just a little bit here, but overall, it just hasn't stayed down for too long. So keeping an eye on that level, I think, would be interesting to watch on the call side. And then I think it's that 50-day on the downside around 808, and it's pretty close to it. I mean, for NVIDIA to go from 846 to 808, it can easily do that in a day. So it is not far from there. So, if this doesn't see that great of an afternoon bounce and that wick on the daily chart starts to go away, I would think that would create another quick put candidate down to the 808 level.
All right. So we'll be watching that price action moving forward. Any other names that you wanted to discuss here?
Yeah, the only other one that I'm watching was actually a name off of NVIDIA was Beamer, BMR. It was just announced in the room there that they're doing something with their I think it's their imaging and NVIDIA. So saw a big spike there. It doesn't trade any options, so that was the first thing I looked for, and unfortunately it doesn't. But kind of intrigued by the chart once I started looking at it, so thought I'd at least throw it out there. Again, this would be in the high flyer realm, which I don't always play around with myself, but I was just looking at the daily chart, and obviously it had another huge spike. I'm guessing off of some similar type of news back on February 12th, and then kind of came down, and it's really been building a base for quite a while in this, around the 6 area. So just the fact that this has been building a base and consolidating for a little while, and then of course gets some news with the general of the market, like you said, and I think that this might maybe have some room to run. I frankly have no clue how beneficial the news is that was announced today. Again, I'm more of a chart guy, but between watching NVIDIA and I saw that news pop into the room, so kind of just watching this as a little bit of a different one for me.
All right. Yeah. Slipping down a little bit here, which means looks like it could be coming back down to that 6th level. So we'll keep an eye out on that Beamer one, though. Obviously, it's been a lot of names. SoundHound comes to mind of companies that have just mentioned being in the universe of NVIDIA. I suppose today isn't the best day to be doing that, though, right? With NVIDIA rolling a little.
Yeah, I mean, you're absolutely right, but that was immediately what came to mind was SoundHound, and again, I think with Beamer, again, just the fact that it's coming off of a pretty long base, kind of intrigued me. So, yeah, I was just thinking the SoundHound in the run that went on after. So I just wanted to at least throw this one on my radar.
All right. I'll keep an eye out on BMR for sure. Seeing SoundHound down a little bit too with NVIDIA. But let's break into today's lesson, Brandon. And we're going to be talking about strangles in front of earnings season, which is pretty popular for traders to use. So let's break into that and talk a little bit about strangles.
Yeah, so strangles, again, not necessarily, you don't have to use this for earnings per se, can be used in other cases. But yeah, like you said, pretty popular tool with a lot of traders to use around earnings announcements. So thought this might be timely with the kickoff starting this week. So a long strangle consists of one long call with a higher strike price and one long put with a lower strike. Both options have the same underlying stock and the same expiration date, but they do have that different strike price. And this is something that is established for a net debit. So again, the money is coming out of your account as opposed to being deposited into your account. In the past, we've talked about straddles. So if you go and Google straddle versus strangle, there's all sorts of different articles. They kind of work one and the same, but they have some differences. And the difference in its most basic form is a straddle uses a call and put with the same strike price and expiration date, while a strangle uses a call and put with the same expiration date but a different strike price. So similar to a straddle, it is a directionally agnostic trade, and it's more about the size of the move versus the direction. So in general, a long straddle will cost you more, but its theoretical value begins to rise as soon as you move away from the strike price. And on the other side, the strangle is generally less expensive to buy as its legs consist of out of the money options, but the strangle doesn't actually it doesn't tend to pick up steam until the underlying gets close to one of the two strike prices.
All right. So obviously the exact opposite of a straddle. So give us an example of JP Morgan's coming up, right? Give us an example of the type of setup you would. I don't need you to give me direct strike prices that you need to use, more or less just the theory behind it using a real world example.
Yeah, so using JP Morgan, I actually took an example from the close of yesterday. So at the time, JP Morgan was trading around 198.5. Now it's dipped down a couple points. So my actual utilizing this would be a little different based upon that, like you said, but this is just an example using the option pricing from the close of yesterday. So if you were to buy the 200 call, it was around $3 per contract. And at the same time, you would buy the 195 put at $2. So again, you can pick whichever strikes you want, but those were just the two that, at the time were in the middle of the price. So in this case, your net cost is $5 per contract, and that's your potential loss. And your break-even prices would be 190 on the put side and 205 on the call side. So we get this by subtracting the net cost from the put strike, and you add the net cost to the call side. So basically, anything outside of those parameters essentially becomes gravy for you. So again, similar to the straddle, you do need to get a pretty big movement in the underlying stock to make this work.
Okay. Basically, this is direction agnostic then?
It is directionally agnostic. You basically, when you go into one of these, you are just saying, move as much as you can in either direction, and I'm happy.
And that differs or matches up with the straddle how?
Really the same thought. It's just in the strangle, you need a bigger move because you're going out of the money, and you're going to be paying less. So in the case of JP Morgan, just for easy conversation purposes, let's just say it's trading at 195 exactly. In that particular case, you'd be looking at going into the 195 put and call. So again, you're closer to the money. So you don't, basically if you're in a JP Morgan 210 call, you need a big move there. If you're in the 195, because it's, at the money in this particular case, you don't need quite as big as a move. So that's really the main difference is your cost and how much you need to move. And that's the difference between the straddle and the strangle.
All right. What's the profit potential on this?
So profit potential is, in theory, unlimited on either side. So I say in theory because if you were to implement this on JP Morgan this week, the stock can technically climb to infinity or it can go to zero. But I'm personally not taking any bets that JP Morgan's going to zero. So you have to take the unlimited accordingly. And then again, just to reiterate on your potential loss, it's limited to the total cost of the strangle. So, again, another good thing about implementing a strategy like this is what your risk is going into it.
All right. So what would be the loss on that JPM then?
You'd be looking at $5 per contract.
$5 per contract. And the profit again?
Potentially unlimited. So, let's just say that JP, knocks it out of the park and it goes up to, let's call it 210. So again, your break even would be 205 on the call side. So your profit would just simply be, 210 minus 205, and you'd be making $5 per contract.
All right. So what would be the main theory behind using this, Brandon, in terms of like, if you're just expecting choppy conditions or if you're just trying to limit your downside, what's the primary use for this?
Usually traders will use these when they think that a big move is coming and they frankly don't know which way. So, a good example might be, flipping back over to NVDA. So, let's say that let's just say for conversation purposes that NVIDIA climbs back up to 1,000 prior to earnings. That would obviously be a pretty strong run. People would be, wondering, has AI hit its peak? All that different stuff that comes into conversation prior to their earnings. And if it was extended to the upside, you could say, all right, well, they're either going to knock it out of the park again and it's going, it's going even higher and going more parabolic, or they're going to say, all right, we've seen peak AI and you think it's going to crumble, but you don't know. And, that's the thing, like we were talking about, the surprises, we don't know, but you think that there is some sort of big move that is coming in the stock. That is where these are implemented.
All right. So this is obviously very timely considering what we were talking about when we started, right? We're kind of hitting a bit of a coiling pattern with investors trying to figure out which direction they want to go. A lot of stocks, you got to figure, are going to kind of fall into that realm. So this is pretty timely, I would say, in this upcoming earnings season.
Yeah, no, exactly. And I mean, I think with just kind of where the market is right now, and, again, I personally am not expecting some huge, profit slowdown, but you got to imagine that there's probably some reports out there that are going to absolutely knock it out of the park and some that aren't. I mean, that happens every earnings season, but
it's definitely the last couple of months, Brandon. You got to figure we've seen winners really rewarded and losers really hammered.
And that's kind of like the perfect scenario right there, really. You can apply that to any sort of theory on earnings. You could go into a company event and you could say, hey, I think this product's either going to be the greatest thing since sliced bread, or, it's going to just completely flop and, Apple's done as a company and it's going to tumble to zero. So that's kind of the perfect scenario. You're absolutely correct.
All right. What else do we need to know about these straddles then, Brandon?
So yeah, as I had mentioned, they usually require a large move to become profitable because you are paying for premium on both sides. And then, again, you can use them obviously anytime you want, but these tend to be used during times of volatility or around volatile events. And anytime that you get that, your premiums are going to be driven up higher. So I mentioned this on the call with straddles too. So it can be frustrating if you do not get the big move that you want, because if all of a sudden you need a 5% move in JP Morgan to cover your play and it moves 2%, well, now all of a sudden you've got both a put and a call sitting that's both a loser. And that can be a little mentally frustrating. So, again, it's part of implementing this strategy. I think it's just kind of important to know going into it in case it does happen, you're not kicking yourself too much.
All right. All right, that's good. That's good information to get going into this earnings season, I would say. Now, you usually don't worry too much about them yourself in terms of playing them. You're much more of a straight call, straight put guy, right?
Yeah, and I mean, again, I barely ever touch anything around earnings. Sometimes after earnings, if I see something intriguing, but I usually stay away from them. Again, for what this is worth, though, in the past, I did use these strategies, and I personally used strangles when I implemented them, and this was mainly due to the lower cost. I wanted to have that lower cost to minimize my risk because, again, you're usually doing these around some sort of impetus for the stock, whether it's earnings, whether it's an announcement, something that's going to make it move. And that's a risk. And, at the end of the day, when you're kind of taking a lotto type trade on something like that, I always enjoyed having less risk on the table going into that event. So I usually gravitated towards the strangles. And also for me too, if I was going into one of these events, I was really of the mindset like, hey, this stock's gonna move. So another reason I liked the strangles was because it was an out of the money, so a little bit more of a less risk on the table, higher potential return type scenario if the trade goes in your favor.
Right. Uh, Here's a question for you then, Brandon. Obviously, coming up on earnings season, we threw out the JP Morgan example, but naturally, these do get a lot more expensive as we get closer in. Is this something that you'd be trying to play a little bit further out to reduce those costs, or does the risk offset the elevated cost of the options getting closer to the event?
Yeah, I mean, if you again, we've talked about this a couple times. I was poor at this of looking out a month down the road and selecting things. I think if you have the discipline and take a few minutes to do so, I definitely think you can get a situation where you can get these for a little bit cheaper out into the future, and potentially make your returns a little bit better. And even in a scenario like this, let's say that we get some pretty big swings into the close and through the inflation report and everything else that we're going to see into the end of the week. There's a potential that trade even works in your favor prior to earnings, and you could potentially even lock in some profit, and you could readjust the strike prices on your trade. So yeah, again, that just wasn't my strong point because I think I was more focused on the now than the month down the road. But yeah, if you have the foresight and you've kind of got your targets selected of what you might think might make those big moves, now is probably not the worst time to look at them.
All right. Anything else that we need to know on this subject before we let you get going here, Brandon?
No, I think we covered just about everything.
All right. Well, there we go. We are about to end our 45-minute discussion, Brandon. And guess where we are in the S&P futures? Exactly where we were at the start of our discussion. So,
I'm
real
shocked. I did not think
right.
that my comments at the beginning of the call were gonna still be standing by the end of it.
Oh, we had that attempted breakdown there right around. You'll see on the chart here. You had your little hammer doji in there midday, right at 2 p.m. But that would have been where I would have expected it to break down, and it did not. It smoothed back up, so it's been pretty stubborn, that's for sure.
Yeah, that is a nice little hammer candle there on some decent volume. And I mean, if I'm just looking overall of the day, I mean, obviously we came up and we've had consolidation around that area a couple times, and we had what would have been the dip, and I mean that's kind of a small dip, and held up pretty well. So attacking consolidation here for a third time on the day is always kind of intriguing, but I still got a little bit in the back of my mind of just maybe be a little cautious for a potential rug pull.
All right. That's especially again CPI looming here. So, all right, Brandon. Well, thanks as always for your time. We will be posting this discussion to the site. Obviously, something that you're going to want to take a look at if you are looking to trade around these earnings plays. So, great information, Brandon, and we will talk to you soon.
All right. Thanks, Gavin. Take care.